All right, I've got no intro video today because the last intro video I did, the Olympic Committee made me take it off, even though I thought it was pretty applicable. It was identifying some problems that I saw in the market. And today we had some new indications of some even bigger problems. I'm going to take you into the SPY and show you what I see there because we've got a reversal pattern that is said to be one of the strongest confirmations of a reversal that can be found in a chart. And I'm going to show it to you guys today. We've got a lot of data coming out that the market wants to digest. Today was a seesaw, choppy day, low volume. The volume was basically an indication that the buyers didn't show up to the party. We were down 40% on volume on the SPY today. So it was a wobbly seesaw day. And until we get that data, it might not get any better. So what data are we looking at? Well, we're looking for the PPI on Tuesday, and we're looking for July's CPI on Wednesday. And yes, it matters a lot because the market is wanting to price in 4 cuts this year, not 2, and they're wanting aggressive cuts. They want assurance from the Fed that he's going to be careful to produce the liquidity that the markets need to grow and not be held back. In addition to that, we're at the tail end of Q2 earnings, and we've got a couple big retail heavy hitters, which are going to tell us a little bit about how retail's doing. That's Home Depot is reporting tomorrow morning, and Walmart is reporting Thursday. Now, those are also market indicators because it tells us a lot about the overall strength of the economy. And so this is going to be a big data-driven week. I've also got my eye on 2 other companies that are reporting, and I'm going to drop some technicals on them this week. One is APLD. It's a stock that we have successfully traded and made some really big gains on in the past. My very first trade on APLD was an entry at $3 that ran up to $10, a massive win. I'm not saying it's going to happen again, but we're going to keep our eye on it because sometimes these stocks that you make a big bag on, you can come back and make another bag. But the environment that we're in right now is very sketchy. We're moving towards the end of this month where NVIDIA's earnings are going to come out, and that's going to tell us a lot about the AI story and whether it can continue to perform in 2024. Alibaba is reporting earnings this week. It's another one that has been beaten down and largely moving sideways for months and months and months, and we'll be keeping an eye on those charts as well this week. This is the Stocks with Josh show. Thank you guys for joining me. Thank you for hitting the like. Thank you for dropping a heart in the comment. We had another successful day in the ChartGoat University, the SWJ Heart Fam Discord. I traded Google puts to the downside. We got 20% the first time and got it again going into close, as well as many other successful trades. Guys, don't sleep on the Stocks with Josh Discord. I also dropped a detailed deep dive on Amazon on Saturday, a deep analysis of where I see that stock going in the coming days. And I'm going to be dropping more deep dives there on Saturday and more technicals all throughout the week. Guys, don't miss it. Check it out. I'm going to leave a link in the top pinned comment for the Stocks with Josh website. One other interesting data point that we're waiting on this week comes from the Small Businesses of America. This National Federation of Independent Businesses is releasing their Small Business Optimism Index for July. And what you need to know about this indicator is that it has been below its historic average going on 30 months. So what does this mean? Well, it means that when big tech rallied in 2023 and the end of 2022 and most of 2024, it meant that most small businesses were left behind. Why were they left behind? Because the banks won't lend them any money because the Fed has tightened interest rates. Now, this is a reminder of what I referred to in July as the great rotation from large cap to small cap, which I believe is going to continue in 2024. As we move towards those Fed rate cuts, we're going to see money begin to flow back into small cap, small business, and they're going to outperform large cap. That's why we're keeping our eye on ETFs like IWM. Okay, just like I said at the open, there is a huge problem with the SPY right now. I'm going to take you into that chart and show you an indicator that's set up very bearishly today and could be pointing to a much larger downturn ahead. And what is that? Well, it's actually referred to as the island top reversal. Now, this is basically when price is moving up or down in a trend, and it gets to a place where the movement heats up and it gaps up. And then it continues until it makes essentially a small V-topped island and it begins to come down to the same price that it had gapped up at, and it gaps down in that same price zone. Now, I'm going to show you guys in the SPY that this has happened, creating a nice little island top. And then I'm going to explain to you exactly how this is traded, and you guys can decide from there whether these markets are getting ready to explode higher and give us a V-shaped recovery, or whether the last month that we've had and going into August is telling us that there's more the pain trade ahead. All right, guys, we're looking at the S&P 500, the daily time frame, and you can see we had this monumental gap up here. We formed a nice little island. We came right back to that price point and we gapped down. This is as clean and clear of an island top reversal as I've ever seen in the charts. This obviously is one of the technical dynamics that the market responded to, giving this really bearish move down. And you might say, okay, Josh, is it been canceled out by the beautiful green candles that we've gotten, bringing us back up to the gap? No. The way that this is traditionally traded is that when you get to this level, that's where you would enter puts for a much larger move down. So that's the textbook definition of an island top. Now, the way that you protect yourself, because even though this has a very high success rate, the way that this would be played is that you would put your stop losses for your bearish positions taken right above the top of the gap. So if it doesn't gap back up or close above this price on the SPY of 541, well, then the market is confirming a downtrend. And so we have to watch this very, very closely because it's a very high concern. So yeah, I hate to be the bearer of bad news, but technically, if we're following the charts, this setup in the charts is a huge warning sign until we cross that gap and close above it on the daily time frame. And I will tell you from personal experience, on a time frame as broad as we're looking at, which basically means an island gap that's run over the course of months, you don't just want a single candle to confirm that it's been canceled, that the reversal from the upside to the downside has been canceled. You want to get a couple candles above that critical level. I'll keep you guys posted on this in the charts. This is one of the main things that I try to do, is to highlight what I see coming in the charts for the days ahead. We're also going to look at the chart of Bitcoin, and let me, before I even do that, comment on one of the more common questions that I've been getting. Now, I think the reason why I've been getting this question more commonly is because there must be some influencers out there spreading this FUD. And I'm going to give you my opinion, right? And it's just an opinion. I don't know, but I'm going to tell you what I think. The question I've been getting is, Josh, Bitcoin has never been through a recession. If we go into a strong recession, will that drag Bitcoin out of the bull run and into a long trending downturn? That's been the number one question I've been getting recently. And I think that's highly debatable. I would first ask, was 2022 not a recessionary year? And so I am not of the mind frame that Bitcoin has to attach itself to the macroeconomics and go down with the NASDAQ. It has moved with the NASDAQ more in recent years as an overall risk asset, but I want to remind you that Bitcoin took off big to the upside when we had quantitative easing and a low rate environment back in 2021. And so if we are moving towards more easing, Bitcoin could begin to perform well in that environment. So don't just jump on board the bear wagon and bring Bitcoin down to its knees. Bitcoin chart is still in a bullish overall trend, even though we have been in decline for the last 160 days. The fact is that the setup overall still points to an opportunity to the upside. So let's go take a look at that. All right, let's just take a look at this chart and analyze a few things. First thing is that every single time we've pushed through and made a new all-time high above the previous cycle high, we haven't had a follow-up month that's opened and closed above that price. The next month, we came back and closed beneath the previous all-time high. So that's the problem, and that's why we haven't had a continuation move higher on Bitcoin. In addition to that, if you study the previous Bitcoin cycle high, you can see that after we made a very strong initial push out of winter, We got very far away from the 21 EMA, which I've been talking a lot about because it's a very easy gauge to determine whether or not you're in a bull cycle or a bear cycle moment. We ultimately had to come back to it and get pretty darn close to it, right, before we went on to make the market high for the last bull cycle. So what are we doing now? Well, we're doing the exact same thing. And I made that clear when we were back here that we would likely have to come back and get close to this 21 EMA before moving on to make a new market high this time. So I think it's still possible. I don't think we're out of the woods yet. We came down, we got very close to it. You can see that we had previously done that once before in the previous cycle. In the following month, we actually continued into some volatility. We never came back and touched it. And so I have said that we could come back and test the lower range move of Bitcoin still in the days ahead. We can still come back and do that before the Fed ever gives us interest rate cuts. So Bitcoin's not out of the woods. So what is the borderline of the woods? Well, you want to see the monthly candles close above 56K. So that's the number one thing that I want to highlight to you guys, that Bitcoin is still in a bullish run if we can keep closing these months above 56. I think that this last wick that we got on Bitcoin was an extremely healthy bull wick, which meant that buyers came in as we moved closer to this price of the low 50,000s. And so I also want to remind you that we had to close this month above 60,600 to know that we were on our way back up to attempt to get above 70, to get above at least 10K above 70, closer to our 80K mark, which is one of my first targets for a breakout Bitcoin move. We're still in this bullish descending continuation pattern, and I still believe that we're going to get that move between 2024 and 2025. So the story of today's video is that I have heightened concerns about the S&P 500. I'm still anticipating a bullish move for the AI narrative and NVIDIA at the end of this month, but we need to be cautious even there that people are not selling big tech into strength. And so no matter what, I think some of the safest ways to play NVIDIA's earnings this particular cycle is to do it as a spread and hedge your risk. My overall opinion on Bitcoin is that we are still going to be moving sideways. We're still going to be between 55 and 65,000 for the months ahead until perhaps we get that first rate cut where I believe that Bitcoin could move higher. But even if the timeline is in weeks and not months and everything speeds up, the technical indicators that you need for Bitcoin are the ones that I gave you in that chart. Bitcoin will get bullish if it closes a weekly candle above 60K. It's going to be in a bearish trend if we remain in weekly candles beneath 60K. That wraps it up for me today. I'm going to drop more charts in the Chart Goat University. Hope to see you guys over there in the chat, as well as the Stock Squad Patreon. I'm going to be checking in there. You guys know that my dear friend Larry Jones lost a brother this weekend. He had been ill, but the exact moment of his passing had not been anticipated. So I appreciate you guys showing him as much love and support as you can. I'm going to be showing up on his page Wednesday to do a video for him, and I want you guys to make sure and go over there and support that video when I drop it. We love Larry. He's a great friend of this channel, and any support that any of you guys can think to give him in this time would be greatly appreciated. Thank you for being here today. Hit that like and subscribe and stop trading blind in these choppy markets without using the charts. That's what I do, and that's what I teach in the Chart Goat University. Hope to see you over there. We'll be doing live trading Wednesday and Friday this week. Peace and blessings. Take care.